The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing today? Interesting trading day with all the news that came out, and just do a quick market wrap on what's going on in the markets right now. What we can see is that the S&P is currently down 16.75 points, down 1.2% for the day. We got the Russell down 6, we got the Nasdaq down 15, and the Dow down 160. Oil's down $1, and natural gas is just down basically 18 cents there. Euro dollar down 62 ticks, wild ride on that one today. And you can go over and look at pound dollars, down a little bit. Aussie dollar staying pretty flat on the day from the close of yesterday. And then we go over and look at corn and soybeans. They're not moving near as much as they have been recently. So the big news today, of course, has been two things that came out. We had the unemployment claims come out. Basically, met expectations or a little above expectations, depending upon whose expectations you were looking at. They did revise a lot of numbers, that basically made people not that excited about. There was a spike as soon as the unemployment claims report came out, fell right back down, and then shortly thereafter, everybody started processing the ECB announcement that came out this morning, and that basically just reflected that they're not doing anything. So after the big statement last week that the ECB was willing to do whatever it takes to save the euro, they said we're not going to take any action. So market pretty much lost all faith in the ECB doing anything. And they had big hopes on possibly lowering the fund rate for the euro. They also had the pound, it also kept its rate the same. Fed kept its rate the same yesterday. So all that combined, Fed's really across the board are not taking any big actions to make the markets move one way or the other. And I guess just trying to stay out of it with the heavy political environment that's going on. But either way, they didn't do anything. And honestly, QE hasn't really proven to do much of anything for the market. I mean, the market itself may fly up, but as far as the economy improving, really it just puts the risk of inflation further down the road if those dollars do eventually spill into the market. And so that was basically left off the board, and so nobody is changing their rates. And again, the market did not like that, and it sold off. And it sold off hard and fast. Basically went down to our standard deviation levels. So we've been talking about that on the last several shows. And, if we pull up on the S&P 500 and we go into, what were the standard deviation levels on the ES there, then what we can see is that if we set the slices there at a plus and minus 1 standard deviation and looking at, just a one-day move, that we were looking at somewhere between, 12.5, 13 points off of yesterday's move. And, it literally just came down and just touched it. So it was like right on it. And so if we go over there and we, what I like to do is look at just the normal charts, and we pull these up and go in, and I'll just pull up in Thinkorswim, and I'll just look at the daily bars and look at yesterday's close. And yesterday's close we can see was right at the 1370.75. So if we go in and we minus about 12 points from that, then we can see those levels and what they meant. So 1370.75 minus 12, looking for a move down to about 1358.75. And the market came down to that level, and literally like right here, just sort of nicked on it, and boom, and then went back up. Well, how low did it go before it retraced? We can check that out, pretty easily. And what we can see is, let's see here. If we check the low out before the retracement back up and then move back down, what we can see is that standard deviation level would have served you very well, coming in at a low of, let's see here, 1356. So if we go in and we look at a 1356 level, and then we add, like I said, about 12 points or so, then what we found is that on the retracement went right up to about 1369, almost 1370. Right before it turned over and went back down. And so it went back down that exact same standard deviation level. So, really, giving you the best of both worlds there. Several trades were in play this morning. Not only did you have the unemployment claims failing to impress, you had the ECB not coming into play. But then, of course, that caused a market gap when the market opened. The market was down here, again, from that standard deviation level. The market opened up, and not only did it do the retracement, but it went back up and it did the gap fill of yesterday. So that gap fill of yesterday was definitely a big play. And so you could have played the gap fill, you could have played the standard deviation level, you could have played the 50% retracement level. All those were in your favor for that trade to go long right there on the open. And when it fell back down, it was pretty interesting. So the market, I was, we were doing some trades this morning, and the market literally was just hesitating. And, sort of wondering if it was going to fall through. And I didn't have a lot of faith that the fall was going to be very strong. And it did come down a little bit, but it went ahead and retraced back up before all was said and done. And now it's right back up, basically, at that drop point, at that standard deviation level from the close of yesterday. So, definitely make sure that you are staying in touch with those. You understand them. We're going to be putting a tool up pretty soon that's going to actually plot and show those for you on the website. And we'll have that up for the standard deviation level, so that way you can actually see what they are on these major markets. We'll have it up right away for what we're looking at is the Russell 2000, the S&P E-mini futures. We'll be looking at the NASDAQ, the Dow, gold, silver, copper, soybeans, corn, and also like euro dollar, pound dollar, and Aussie dollar. So that's the goal, is to get that up and running for you, so that way you can have those numbers every single day, and you can use that to help you in your trading. So right now, got the market in a little bit of a pullback. It's definitely going to be fighting a battle right here where it's at right now. And as you can see, it's pulled up, but it just definitely hasn't, broken through that level again. That was before was support and is now resistance. And if we go over and we look at the DOM, basically the depth of market, then, what we can see on the depth of market trader right here is just sort of, looking at order flow. And we just don't see a whole lot of order flow in either direction. We see a little bit of a stack up right here at 1,200. And, that's about as deep as it's getting. That's really not a big number to be concerned of. And that's at 1355.5, which is, right there below the low. So that makes sense. That's where it's, bouncing off of. And, if you have any questions, want to make sure that you do know to call in. So here to take your calls live and help you out on diagnostic trading and on how to trade on Nadex. And let me pull the number up for you. You can reach us at 1-877-927-6648. Again, that's 1-877-927-6648. Or if you're outside the U.S., give us a call at 727-445-1044. And again, that is 727-445-1044. And, a couple of things I want to go over today was just, we talked about trades yesterday and what you could have done. You could have went in, you could have shorted in the morning. And, this trade obviously was a perfect trade, but even this morning you could have shorted or you could have straddled the market first thing in the morning. And the straddle plays are my big favorite plays to do on Nadex whenever you're at just a crucial point where the market is going to move, because a big announcement's coming out. So something's definitely coming. And the straddle's nice because you can do a couple different things. So I wanted to pull that up and look at a potential straddle play and to sort of show you, what you could have done and how you could have played that, and maybe you could use this next round or maybe even tomorrow morning. And so if you don't have a Nadex account, go over to tfnn.com. Again, that's tfnn.com, and you can click on the Nadex banner, okay? And click Nadex right there. Also, if you're listening on mobile, or if you don't know, you can listen to us on tfnn.mobi, so from anywhere, and, or the local radio stations where you're at. But Nadex now has a mobile platform. And you can sign up directly from the mobile platform. Just let them know that you heard about us, heard about them from TFNN. But you can actually now download their app for free, and they just added in charts and some other cool features into it. And Nadex.com. Click on that. You can sign up for a demo account. I think you may have to do that on the website for the demo account. Click Create Account, and right down here where it says Want to Test Drive, click that. Or to open a live account, click Start. People go, how much is it to open an account? It's only $100 deposit to open a live account. And they don't have any kind of commissions. They do have exchange fees like any other exchange does, but you're paying that on anything there. So with this, you're only paying the actual exchange fees versus the commissions. And you can go over to Want to Test Drive, click on Open a Demo Account, and you just put in your first name, last name, phone number, what demo username you want, and your email address. Hit Apply for Demo. 5 seconds later, you're going to have a demo account because they'll send you a password in your email. Pull that email up, and then go over and just click on Log In. And you can log into your demo account so you can actually trade along and learn with us as we're going through these and as questions come up. And, we had a pretty cool trade yesterday in oil. We'll see if we have any good setups today. There's a lot of movement already. So, we definitely want to be cautious on our moves right now and see if there's anything just sitting at a standard level that could, basically benefit us. And before we go into that, like I said, I do want to look at is how a straddle play would have worked out for you if you would have done that. That was one of the suggestions yesterday, was to place a straddle on the market in the morning. And so if we're going to go in, and the news announcements basically came out at 7:30, and what we'll do is I'll pull that right up, and you could do, this is 7:30 would have been 8:30, so you could do the 8 to 4:15s, and you just look at the two straddles of the market, and you can see where they were located. And right here right before the news announcement, you got a 1381 basically, and over here we're looking at the short side. Then we'll pull that back up in a second. Looks like we got a caller. I'm going to pull this back up right after we do the call here. And it looks like we got Paul from New York. So I got some questions about positions and spreads.
Yes, here. I'm calling back from yesterday. I have a different question. I think you're covering it actually at this point in terms of if there's a big move overnight, when do binaries become available? Like, obviously the market doesn't open until 9:30 Eastern time, but what time does your Nadex spreads become available to position for those moves overnight?
Well, they're actually trading with the futures market. So unlike the cash market that we said doesn't open until 9:30 Eastern time, they're trying to trade along with the cash market. And so depending upon what market you're trading, you can have different hours. And to find those hours, all you do is you go to nadex.com.
Right.
And under range of markets, you can click on, let's say, stock indices. Okay? And then if you click on contract specs, they'll actually give you the hours for each individual product. And so you can actually start trading as early as 6 o'clock Eastern time on the binaries. And then if you go down the spreads, are the exact same, 6 o'clock. So you can actually start trading them pretty early. And then a whole bunch of them will start becoming available in the morning, starting at 8 a.m. Eastern time. They'll have one like every hour coming out. So on the that's on the indices.
It's not 24/7 during the week then.
Basically, it's not 24/7. It's pretty close to 24/7 because it'll close down at 4:15 and open at 6. So you can trade it that entire time. So you can trade it between 6 p.m. and 4:15 p.m. the next day. So there's about an hour and 45 minutes where it's closed down.
How does Nadex take the other side of these trades? I mean, do they buy futures or a combination of how does Nadex take the other side?
No, that's a great question. Actually, Nadex doesn't take the other side of the trade. Nadex is just an exchange, so I don't like the CME. So they're actually not on the opposing side of the trade. Their job is just to facilitate the order flow, and so they're not trading against you. I'll actually get into who does take the other side of the trade and how that works. If you hold right there, I'll get back to it right after the commercial break.
Okay, very good. Thank you.
All right.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit tfnn.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And it looks like we got Paul on the line. We've got some questions about the market and the market maker and how that works. You there, Paul?
Yes.
Awesome.
Yeah, hi, Darrell. Thanks for taking my question. Yeah, who takes how is it facilitated of the other side of these binaries and spreads?
Okay, the other side of the trade for the binaries or the spreads on the Nadex exchange actually is done either by other traders or by contracted market makers. So, like other traders, obviously, they're just taking the other side. Market makers, they don't know if you're entering, exiting, winning, losing. They just know you're putting an order in. Okay, and they don't know it's you even. So you're anonymous, which is very important when you're trading. That's the benefit of an exchange. You get to be an anonymous participant versus like a lot of like over-the-counter FX and stuff like that, where or even some of the over-the-counter binaries internationally.
But it's done via the futures, though. It's done with the futures essentially. Right.
It's on the exchange, and they're basically a futures type of option. So the box spreads and the binaries, and then registered, and then Nadex is registered with the CFTC. They're fully regulated. But the other side is, to directly answer is this: the market makers or other traders are taking the opposing side. Market makers, like the market makers they have, are huge. They do global trading, and just insane amounts of transactions every day. And so, they're laying off their trades on CFDs, on futures, on indices, like on binaries and other markets. So they're literally laying off their trade constantly. And that's really what the bid-ask spread is for, is to give them the time and the ability to lay that trade off.
Okay, so essentially Nadex expertise is the algorithms to figure the mathematics behind, what you present as different offerings of the binaries and the spreads as opposed to the futures of who's going to cover those on the other side.
Right. They're not even really that involved in the algorithms. So they're really just the exchange facilitating the transaction back and forth. So you want to buy, you want to sell, we put the buyer and the seller together, whether that be another trader or a trader and a market maker, two traders.
Okay,
they're literally just filling that.
Simply in terms of facilitating a trade, like if you go to the U.S. Tech, usually the market spikes up right before the close. I don't know whether plunge protection gets involved or what have you. But if you I'm looking at your screen. I opened an account by your Vice, and if you use the U.S. Tech 100, anticipating a spike, how would you suggest to enter that trade?
Okay, on the U.S. Tech 100, so if I pull up like a demo account over here, then the U.S. Tech 100, now out of all the spreads on the indices, this is probably, just to let you know, probably my least favorite, okay? And the reason is because how it ticks. Notice how they drop off the decimal places there, like it's 2640 versus 2640, like 0.25, and so It has to move further for like break even and everything else. So now I love the small caps. The US 500 I love because it's even tighter. It has 0.1 versus 0.25 like on the E-minis. So it's even a tighter tick. So that's actually my favorite out of all of them. And then Wall Street 30 is great too. But let's go and just focus on US Tech 100 over here. So if I'm pulling up US Tech 100 and I look at a chart on it, and if you're looking at it, say, wanting to buy on it right now, then what you're going to need to do is find the spread that's going to be basically within your profit goal there and your price range. And so, like, let's say right now you think the U.S. Tech, the NASDAQ is basically the mini NASDAQ is, let's just say it's at support, okay? So that's why you're looking for a retracement. And so let's pull up the prices, and we'll see what we got. And so what I'm going to do is I'm going to find one that's as close as possible to the floor, so like 2610, okay? So that would be a potential trade right there. Now, so that's the first thing I'm going to look at. So what we'll do is we'll actually add this here. We'll just add it to a watch list. All right. So we're going to put that one on a watch list, and then let's see here. We'll pull up some other ones, see what we got. If we got any more that are lined up, that's also 2610. So that's good. So we'll add that one to the watch list. And let's see here. If we got 8 to 415, we have anything that's really good. That's pretty far away. 2630. We got a 2590. That's a possibility. So add that one to the watch list. And then we'll go down and we'll look at the daily 100s here and see if we get anything. 2620 is about as close as we're getting on that one, so we'll add that one to the watch list. Okay, so this is just based on where the price is right now, 1230. And then you can go down here and pull up our watch list that we just did. So that makes it really easy to compare them side by side. Okay? And a few things to notice is... go ahead.
I don't know if I can mention, but on your screen, even if I blow it up 400%, it's kind of difficult to read. I don't know if you have any technical possibility to make that more clear. It's difficult to see. I'm looking.
Is that a little bit better right there?
That's much better. Huge, much better because it was very blurry and undiscernible prior.
Okay, so got that zoomed in for you, and we can also drag this over to make it easier to see the fields that we want to see. Stay right there, and what we'll do is we'll come back and we'll analyze each one of these to figure out which one will be the best spread right after the commercial break, okay?
Thank you.
You bet.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour. Here talking with Paul, and we're looking at the U.S. Tech 100 spread to sort of figure out how do you pick the best spread with all the options.
Well, Darrell, if it's possible, because the difference in the spread, the bid and ask is so wide there, could we follow your advice and go back to the S&P 500 in terms of what would be the best one, anticipating a spike at the end of the day?
Yeah, and also I can just wrap this one up for you, too, just so you have it. On this one, because I already did all the research here. But yeah, we'll definitely pull the US 500. One of the things, just some good things to point out is, see how this one right here, it's going to have the lowest risk, okay? Okay. It's only have like a $2 risk, so that looks absolutely fantastic. There's a problem with it. It has to move like 10 points before it can be profitable, because right now the NASDAQ's at 2609, okay? So even though the risk is low, the probability of making money is also very low, all right? So you're probably not going to want to trade that has to, you want to look at not just risk, but also how far does it have to move to be at break even.
So how far does it have to move to break even?
So right now, if you're buying it at 2622, the NASDAQ would have to move, the NQ would have to move up to 2622 to be at break even. So you're talking about, 12-point move for break even. So that trade obviously would probably not be the one that you want to do if you're expecting a spike, because you basically almost give it all up, okay? So
now,
that's just... Go ahead.
Particular spread, if it had bought it earlier in the day, like after it spiked down, it would be at a much better entry.
It really would not be a better entry because the floor on the spread is actually 2620. So on this one, since so the price is always going to be at least 2620 or higher. So on this one right there, that lets us know, hey, it's far away. So that's just one of the big tips I always want you to make sure you check on is if that floor is above where the market's at, then, it's going to have to move to that, at least that price, or really the price where you buy it at before you can break even. So that's the trade. It fools a lot of people. They go in and they grab them because they're so cheap, but then they don't realize that they had to move to the price where the NASDAQ has to move to the price where they bought it at to be break even. So when you're doing that, what I do is you can go in and you can actually just remove it from the chart. Okay? And then these are all now at least at or below where the market's at. And, knowing the market's at 2609 right now, this is actually the closest one, this trade right here, to where the market's trading. And so on one of those, we're looking at a $20 risk, $60 profit potential, up to 2670 there. And we had the ability to, like I said, we limited our risk. It won't lose any money below 2590. So that's a really good trade. It's trading right on par with the market, so we're not paying for a lot of premium, and it expires at 4:15. So it actually gives us the longest amount of time. The other two are going to close early. These two actually have the exact same floor and ceiling, but they close at different times, 2 and 3 o'clock. So and then they're also further away from the market, so there's more premium, and they close sooner. Now the risk will be a little bit less, but again, it has to, it's going to have to move a few points to be break
profit, even. And what is the break even level?
Right, the break even level will always be the difference between where the market is and where you buy. So if you buy at 2613, the market's at 2609, then you're talking about a 4-point move required to be profitable. So all you got to do is look at where's the market, if we pull up a chart right here, and, where is this trading at? And this one's trading, like I said, right on par, pretty close to it. And these other two, though, they're pretty far above it. So just always make sure you keep that in mind. It's not a bad thing that there's going to be a little premium in there because, again, less risk. I mean, this trade only has, $2 of risk for a $30 profit potential. So that's not horrible. It's just you want to understand that it is going to have to make that move, and it has to make it by 2 o'clock Eastern time. But let's go ahead and go over, like I said, the U.S. 500, and let's see if we can pull up something that'll work well. The U.S. 500 has had some big moves today. The S&P E-minis is what they're based on, and it's based on the September contract. And so right now, it's like we're sitting right around 1353. Let's see if we have any that are at that level. I want to look at the max over here. Yeah, that's not going to work. Let's see here. This is a 1350. Okay. So we can add this one to our watch list because that's right close to the floor there, 1350. And you can even drag this over and you can actually sort of see, what the difference is. That's also pretty on par with price, 1354. So there's only like a point move to break even. So that's not a bad trade at all. And again, you can't lose anything under 1350. And so we got that trade, and that one's going to expire at 415. And then we have, let's see here, 1350.9. I think that's the one we added, but just to make sure. And I want to add the 8 to 415s.
Is that based off the cash or the futures?
This is always going to be based on the futures. So it's going to be based on the S&P E-mini futures. And that's really important because if you look at the SPX, you're going to be like, what is going on with the price? So, yes, so it's going to be based on ES.
Different prices.
Yeah, so because, basically one's based on a future price, one's based on the current price. So if we look at them like side by side, the cash index on the S&P, and we can even pull up the spiders, then you'll see like the spiders, if we go in and do the multiple there to equalize the price out. 1359.7. If we go over and look at the cash, it's quoting at 1353.25. If we look at the SPX, I'm sorry, that was the futures, 1353.25, and the SPX is quoting at 1357.88. So you want to make sure you're looking at this price at the S&P E-mini futures. And there actually is a trick that can sort of help you too. Let's say you don't have a futures trading platform yet. You can go over to what's called the master spread, and that'll actually be the biggest spread right here. Okay, so it'll be basically just the widest one. And the chart on there is usually going to be right on par. Even the quote will be right on par with where the market's at. So if I go in and I pull back up a chart on the S&P E-mini futures, then you can see that's right there. So this is quoting the mark, 1353.1, 1353. So it's really a good way to look at it. And one of the things that I'll even do is I'll go in and if I'm looking at that one, I'll pull up, and you can do a tear-off price. And you can literally just have this thing sitting up here quoting and sort of use it as your current quote marker, okay? So that way if you're trying to go, instead of having to go back and forth between charts and everything else, you can sort of see what, pretty close to where the current price is on the S&P E-minis. And that's the master spread. And the reason is there's going to be very little premium often because it's right in the middle, and in the middle there's little to no premium. And so the master spread being so wide, that's, usually going to be the case, and as we saw right there. So between the ones that we have, with the market being right at 1353, we have, this one right here, and we have, see, 1345. So you could do that one. That's, you're going to have a lot more risk in that. And then you also could look at the sooner ones. Depends upon if you want to hold it to expiration. If you're taking a spike right at the end of the day, then you're probably going to want the ones that, last until the end of the day. If you're now the short ones are great for news announcements. So you go in and you can trade those right before a news announcement for, where they have an hour left after the news for the news to make its move. And
right.
So that's usually how I like to use the short ones, is for that. And then, so once we pull that out,
did you notice when the market's down significantly that for some reason at the end of the day between 2:30 and 4 o'clock it spikes up seemingly several points, like 8 points? Typically, it just seems like, I've been doing this for a while, and it somehow at the end of the day there's buyers that come in, and if they buy at, between 2:15 and 4 o'clock, it goes up about, 8 to 14 points.
Yeah, you actually see that a lot. A lot of that's shorts covering at the end of the day. On a big down day, you have a lot of short sellers. And short sellers... What would be the best spread to enter at this point if I anticipate it going up, say, 10 points between, say, 3:15 and 4:15? Okay, basically, if you want to get in now and you're looking for that and looking at the trades that are available, let's see here. Let me do a quick analysis of them, okay?
Okay.
And what I see is that our best spreads, as far as risk and reward, and want to hold all the way to 415. That's the big criteria there. I am probably looking at either the, let's see, 1353. I'm probably with the 1350 to 1390. It's going to have a good risk reward on it. So this one right here.
Right.
And so if we pull up the risk reward on that, we're looking at a $53 risk, a $347 potential reward, and it's only about a point and a half there off the market price, which is currently the live quote. Let's see here is, so jumping between charts here, 1354. So yeah, it's not that far off, but it does limit my risk to $53 on one of them. Now, if I want to go in and do 5 of them, okay, so then $265 risk is $1,700 potential reward. So let's say you're basically assuming that we're around the bottom of the market for the day, which I think is probably a pretty good assumption. Unless something else surprisingly comes out. And let's say the market rallies, 8 points from where it's at right now. Okay? And just based on the presumption that it's going to go up 8 points. And one of the things we can actually use too is the standard deviation off the new low. So the new low for the day that we have is 1349.25 plus 12. So that could put us up right around 1361.25. Maybe as like a profit target. Okay?
Right.
And so if we buy at 1351.25 if we buy at 1355.1 and sell at 1361.25, so minus 1355.1, then we have basically a profit of 6 points, and that'd be basically $50 a point if we did 5 of them. So it's a $300 profit. That's about a 1-to-1 risk-reward ratio, a little bit better than that. And so that'd be a very easy trade to do right there. Now, another trade, you mentioned the binaries. Okay?
Yes.
But this would definitely be the spread I would choose for doing this trade. We're expecting a market spike, thinking we're at the bottom, because you have very little premium, and you have until the end of the day to be right on that. On the binaries, if we go over, and we had that that profit target we came up with at 1361.25. So what I'll do is I'll go, okay, well, what do I think? Let's see here, daily, and then I'll pull up the binaries, and look at 1361.25. So 1361. And this might be a better trade. Sometimes the binaries are going to be a better trade for you. We pull it up, and if it actually does get to... Now, this means it is going to be above 1361. Okay, so it has to be at it. Now, you don't have to wait till expiration, but at expiration, if you still have it, it has to be above 1361. So we're talking at least 1361.25. And so if we go in this, and let's say we want to equalize out the risk, because the other one we had about a $250 risk. So if we go in and... Yeah, we do that right there. Then you got a $1,300 potential reward, a $240 profit potential. Now, the cool thing about this one is, versus the spread that we were looking at, is if it is above 13, if it's basically 1361.25 or above, you will make 1360 at expiration. So it doesn't have to keep going. Like, that is what you will make. You will make that amount of money. The bad thing is...
that's great. I'm just trying to follow on your screen.
Okay.
Unfortunately, it's cutting off part of it. How did you toggle to that particular position entry? Because your screen is cutting off the left-hand side.
It's the zooming in part there. So I'm trying to zoom in for you. What I did on the left side here, let me zoom out a little bit so you can see it. It'll be a little... I know it's not going to be perfect there.
I mean, how did you get in from is it under binaries, S&P 500?
Yeah, over on the... Exactly. On the Finder side over here on the left...
Yeah.
You'll see indices, bull spreads, and indices binaries. And so to pull up the indices binaries, just click on that. And then under that, click on US 500.
Okay.
And then if you want to see like the big list, you want to look at either daily or weekly. So since you're talking about a trade for today at the end of the day, you want daily because these are going to expire at 2 and 3 o'clock. Okay? The daily will expire at the end of the trading day, which whenever you pull it up, you'll see it there is 4:15.
Okay, so you clicked on daily. That's a daily spread.
Exactly. You click on if you expand the daily, it'll just show it. But if you click on daily, it'll actually put it in the what's called the market tab right here. So that way you can look at all of them at once, which is really helpful. And but yeah, that would be like that would be your pick. Again, the good side is, if it gets up there, you're making 1436.50 literally if it just gets to that price. Okay. The bad side is if you hold it to expiration and it doesn't get to that price, then you give all that up. Okay?
What if you
because the binary is a true or false
prior, if it goes partially, does it have any value if you close it out like 40? If you open it now and you see that the market's stalling, does it have any value if you close it out prior to the 4:15?
Yes, definitely. So you can close it anytime you want to before expiration. So let's say it starts moving up, then you can close it right. Basically, it's $16.50 to buy it, $11.50 to sell it right now for one of them. Okay. So you could literally get out like right now. If it moves up a few points, and sort of what you can see now, this is absent of time. Okay, so but what I like to do is if I'm looking at this and I'm trying to figure out what is this thing going to be worth with 3 points movement, right here, this right here. So if the market moves up 3 points, just sort of go down, okay, it'll be worth $25.50. Okay, and then if it moves another 3 points, it'll be worth $40. If it moves another 3 points, it'll be worth $57.50. Now this is before expiration. Okay, so that shows you like the intra-market movement. So let's say we just shot up right now to 1361. Okay, then that's basically a 6 point move, 7 point move. So we basically just go like 2 strikes. We'd basically be right around $40 to $50 in value. Okay, of this binary, and you could get in at 15 and get out at 50. And I'm glad you bring that up because that actually is with the binaries. I like to get in them, and I usually don't like to hold them to expiration. So I've had a few where I've held to expiration. I had one, I want to say it was last week, the week before, where literally held it right there, and it just kept coming in, coming out, and I'm like, it's going to make it, and it finally did. It actually did, but we're talking like by 2 ticks. I cleared the binary, and I really don't like to trade that way. I don't like having that kind of pressure. I like to get in, and if you can get in at 15 and get out at 30 or 45, if you get out $45, you made a $30 profit, on the trade. So you basically made a 2-to-1 risk reward. And that's a good trade. And so that may be the trade you want to do, is it gets in, it starts moving up. When it's at about $45, you close that trade out.
Thank you so much, Darrell. We'll be talking to you soon.
All right. Thank you. Thanks for calling in. Thanks. There, folks. We'll be right back after the break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And Paul, hey, I appreciate you being on the line there and helping us out with everything and asking questions, so feel free to call in anytime. Anybody else has any questions, call in, and I want to answer your questions for you. And one of the great things that came up, and I get this question a lot. People are like, what's the difference between a binary and a spread? Well, a binary is a true-false statement, okay? So it's literally saying that, in this case, if I buy it, I'm saying true. What is the statement? Well, in this case, on this ticket here, it says the U.S. 500, being the underlying market being the S&P 500 E-mini, September futures contract will be greater than 1361 at 415. If that's true, then you'll get, basically, you'll win. You'll make money, okay? And the amount you make will always be an amount of $100. So every binary is worth $100. So if my risk on this trade is $14 or let's say $15, then my profit potential on the trade is going to be $85. So if it does expire at or above 1361.25, I will make literally $85 for every $15 I put at risk. So it's a great risk reward potential. Now the bad side is if it expires below that and you said buy, then you will lose the $15. So not a lot, but I mean, if you're doing 20 or 30 of them, it starts to add up, right? And one of the things you can do is you can get in it and you can get out of it. So if it goes up, let's say 6 points, it'll be worth, say $40. You can get in the trade and get out and double your money. And that's a good way to trade. You don't have to wait until expiration, okay? But again, a binary is a true-false statement. You can trade them directionally. They're great for flat markets, especially when they're close to the strike price. And like yesterday before the Fed funds rate, it was really good to go in and trade the binaries. And, just anytime before a major news announcement, like an hour or so before that, if nothing else is happening, it can be a great time to trade the binary because the market will just usually oscillate right there. Now, the spreads, on the other hand, are more like the underlying market, okay? So it doesn't matter if it gets to 1361 or not, all right? The spread says there's a floor and there's a ceiling. So in this case, it's 1350 up to 1390, all right? And I can't lose any money below 1350. I can't make any money above 1390 unless, with the open box hedge strategy that we talk about sometimes. But if you're just doing the basic spread, you don't lose below 1350. So your risk is capped, which means you cannot be stopped out of the trade, okay? So even if the market drops to 1345, you don't get stopped out. And you have until the end of the day, in this instance, until 4:15 Eastern time, to be right and to profit. And so the big benefit is it's just like trading the underlying market. And like I said, if you do 5 US 500s, that's like doing one S&P E-mini future. Massive leverage. I mean, it's over $60,000 of buying power for only $235. And you cannot get stopped out of the trade. And if the market expires where I bought it, so if I buy it at 1355, it expires at 1355, I get my risk capital back. Okay? The binary, if I buy it and it expires where it is right now, then I lose. So, binaries are more of a statistical play, or, I'm getting in, getting out. You can do them overnight. I like to do them if there's going to be a big announcement overnight. Sometimes I'll put on some binaries and play with those, like on the dailies or the weeklies. But side by side, lining them up, there's a bigger move required for the spread to make you more money. But there's also less risk in the sense of it doesn't have to move that far for me to not lose money. Okay? So, in other words, like right now the S&P is quoting at 1353.50. The binary only has to move the spread only has to move 1.5 points, and I'm break even. The binary, if at expiration, is going to have to get all the way up to 1361.25, or I lose the amount of money I put up. So they are definitely two different products. Keep tuning into our show, and I'll teach you, just how to really understand the differences. But true-false versus up-down is really what you're doing. So up-down being the spreads, true-false being the binaries. So I hope y'all got some good stuff out of the show today. Thanks for tuning in. And if you have any questions, feel free to call in tomorrow. I will be here, same time, same channel, tfnn.com, at 12 o'clock Central, 1 o'clock Eastern Time.